Hey everyone, welcome to another video. What we're going to be doing today is very simply going through what transpired in the market today. We're going to be looking at key levels and we're going to be thinking about what we can do and come up with a game plan on how we're going to act based upon what we see. So in other words, what I'd like to do is have a game plan, understand where the key levels are, what we're going to do about it, and what we can do going forward. So let's get right into it because we have a lot of stocks to cover. I'm going over them in alphabetical order so that people can have key levels. And I'm going to do it a little faster because there's a bunch of them. So let's just get into it because some of these are actually really good. There's some really solid ideas in here. AMC, look, I like this a lot. And I'm going to throw these indicators in. You have that you're respecting the 50-day, the 21's rolling, but you're in this enormous base here. See this base? Like, look how it hangs out there. So I don't see any reason to do anything. So I just really don't see any reason to do anything. Let me go to the weekly on this to show you what I'm talking about. So see how you're staying above that 771, 778 area, and then you're coming down and you're not getting above that 200-week moving average yet? Like, I really don't care that we're not getting above it yet. I truly don't. But we're staying in there and we're hanging in there. And a tape that's pretty much punishing these types of names, and this isn't going down. So I think that this was grossly oversold before, and I think that it's a real company, so I think it's going to be around for a little bit. Not something that I think you need to get out of. I like that trade a lot. I would stay in there. Atom, look, it's a smaller name. In 2 weeks, you have not seen any reason to stay in this. I don't see any reason why this is coming back. Look at this. You had an M possible bottom, and then you broke it. So you need to hold 1713. If you don't, you're going to get through that, and you're going to get through the 200-day moving average. And as everybody knows, the 200-day moving average is the last bastion. Before the bulls just abandon it. So you definitely don't want to be buying that one. AYX. I mean, this was just such a huge winner for us. And you can just see how it came in. I really don't see a whole hell of a lot here, excuse my language, that would get me convinced that I need to be in here. You broke this rising wedge. You tried to get above it, tried to get above this line. It was rejected, and you rolled. I just don't see anything. There's really very little support here at all for this name. So, this is really simple. I mean, if I was long this, I would definitely be considering getting out of it, especially how you can't even get above the 21-day. If I took out a lower low, I would get out. I don't really know where your support is. Maybe 76, maybe. BLBD, smaller name. This is actually acting pretty well. Look how we're respecting the lower channel here. Yeah, we broke it a little bit. We saw the opportunity to get back into it. We're between the 21 and the 50, and they're pretty close to one another, aren't they? And you like to see that right now. And we're not really taking out lower lows, so this is not something that I think that you need to be out of at this time if you're in it. I don't see a sign to buy it yet. To buy it, I'd want to get above a peak, so I'd want to be looking at that 26.93 level before I got in there. CELH. CELH is one that's on that list of 16 stocks I think could see a spike up on the short covering. Look, we got to that 62.33 level and we just didn't break it. We talked about this level. We just couldn't get through it. And this is what's transpired. So that's something that we really have to take a look at. I still would not get into it until it's above this level. You're holding that 50-day. But, these stocks are they're all coming in. They're all being tested. And I don't think that's going to stop. So 62.33 is or 62.23 is where I'm looking. Coin, you're at that 310 line. This is the daily. Let's go to an hourly, just so you can see what's going on here a little bit clearer. Look, on the hourly, here's that 310 line on coin. And you can see that you keep testing it. Let me put this up here so people can see this one. So you just keep testing it. And I think you really got to be aware of that. You break that 310, it's going lower. And until you break this upper wedge, I don't even need these indicators. Until you break that upper wedge, there's no need to be in this. DMTK, is one that's on that list of stocks that I think can turn around. But I walked through this the other day, and I'm going to blow this up so that you can see what I'm talking about. I stated that if you broke this 42.97 line, you have to get out of the way. We opened there and that was it. And we went right through it. And now there's this lower wedge. We've broken that. We've broken this support line. There's nothing here. If you throw in the indicators, there is no support there. There really isn't. You can say that you're at the bottom of this, but there's really the next support level really is the 200-day moving average. So I definitely would not be trying to catch this falling knife here. If I was long and it took out a lower low and I was short term and I was not up in the trade, I would be out. I mean, this is telling you that it's going lower. ENPH is holding that lower trend line, isn't it? And the 50 and the 21 are they're not really pointing down. They're declining, but they're not really pointing down. And we're still hitting higher highs or higher lows. And we're still hitting lower highs. So we're wedging. And this just could be basing for a while. I don't see a big hurry to do anything here, long or short. I don't think this is going to cause us any pain or make us any money. I just think it's going to stay in this range for a while, and then eventually it should pop and hopefully retest the highs, but there's nothing to do here. Etsy, ETSY, you can see the 21 and the 50 and how they're acting here. You have this older trend line from before, and you can see how we broke it. Look, I'm still in this. Let's get rid of this so we can just look at this a little clearer. I'm in this enormous base between 230, which I thought we were going to break recently and didn't, and 190, 198. So we're in a base, and play the base at this point. If it gets down to this level, consider buying it. When it gets up to this level, consider selling it. Don't make this one more complicated than it needs to be. This is what it's been doing since January, and it'll probably continue to do it. FNGU is actually in the newsletter, and if you don't get the newsletter, there is a link in the descriptions. Just click it. It comes out 3 times a week, and I give actionable ideas and color commentary. It's actually, I think, pretty informative, and people seem to like it. I'm not crazy about that action, and I'm certainly not crazy about this. Now, we were up in this, and then we're down in it, but thankfully we didn't get stopped out yet. But you're right on that 21-day. If you break the 21-day here, I would be out of this. Based upon this chart, I would not add to it. Get above this key level and the 50-day, and I would add to it again. That would have me interested in it. Until that happens, I really don't have any interest in it. So FUTU, we did great with it yesterday. That was on that 16 stocks to buy list, and I gave a signal yesterday. Hey, it broke through. We did well with the trade. After hours, they decided to sell stock, and we just opened and gapped down, and there's not really much more to say about it. It is what it is. It happens, and there's nothing you can do about it. Clearly, I was asked today what to do with it. I just said avoid. You don't want to be in this thing. There was a point here where I want people to understand this, because I do like giving lessons for those that are new watching these on education on what to watch for. So something happened today, and a lot of people were talking about, oh, it's breaking out, it's breaking out. Well, we did a candlestick video on this, and I actually took a short position, and I really didn't get too into it on Twitter as to why at the time. But I just said you need to really watch this level. And what I was getting at is, you see this hammer bar right on the support line, and everybody was getting, as you can see, the support line, right? And everyone's getting all excited about it. It never triggered. The trigger of this hammer bar is when you get a higher bar that pushes over it with volume. You had none of that. What you wound up having was a reversal pattern where you had a bearish engulfing. Once you didn't break this and you undertook the close and the open, this was toast. Okay, this was no longer a signal. This was a failed signal. This was a clear short signal. Okay, and you can see how it responded to that. Now, where we're at now, the question is what to do. Okay, now you're at the lower end of this old. See this falling wedge? You're at the lower end of it. What do? This needs to price and process the secondary, and once that's done, it may be of interest. It may be of interest to be back in there. As of now, there's no reason that this stock can't have another long red bar down. There's no reason for it that it can't. This is really bearish. I mean, you opened at the high, you closed at the low. It doesn't get more bearish than that. So that can get worse. GRWG, this was one that we've been watching for a while. We did well in the newsletter with it, and it's on my stock list of short positions that can get squeezed. But we broke this rising wedge. We see that pattern right here? Same pattern I was just talking about. That's why I'm trying to get you guys and girls to recognize pattern recognition. There's the hammer, but it's a failed hammer. The next day we open here, try to get above it, we don't, come down, right? And then it just rejects. Now we're at support. Breaking this kind of pattern can lead to retesting major support lines. We're trying to test this one at 43.14. If we break that one, we're going to 37.31. I would not be trying to catch this falling knife. JMIA, I mentioned the other day, and I mentioned it as far as what we need to do with it. Look, at 31.33, I said that I think it's a short. It broke. There it is. Now we have to hold the 200-day. If you don't hold the 200-day, this is going to get nasty. And these can always get worse than you think that they can. If you don't hold this 200-day, there is no support until 1960. Just keep that in mind. This can get a lot worse. So LEBU, I'm not going to go over. I'm looking at it on my list. Just avoid it. I have too many names I want to get through, and some of them I think are real winners here. MELI, M-E-L-I, look, this has just been a monster winner. And we really have not even retested these lows. And I think it's important to note. But look at these lines I have, 1628, 1353. We're just in a trading range. I would not buy this here. If I close below the 21-day, I'm probably going to test the 200. So I would not want to be around for that 100-point drop, 130-point drop. So that would be my stop. And frankly, I don't want to buy this now until I'm above the 50-day. See how it's curling it and corralling it in? They're your two levels. So I'm going to do this one because I just want people to understand this. When you broke this trend line, which we drew months ago, we talked about getting out of this. It tried to get above the 50. It couldn't get above the 21. This is going to 24. Okay, it's just going to be like a magnet to $24. There's probably nothing that's going to stop it unless something fundamental comes out. If we break that 24, you have to hold the 200-day. If you break that, you're looking at $16, $17. So just keep those levels in mind. There is nothing here that would convince me that you need to be in this or long this at that point. I'd rather be harsh instead of rosy, because rosy's not going to make you money or save you money. If you're long this and you're down, you really need to really reevaluate this position. This is really nasty and looks like it's going to get worse. MVIS, look, you're holding right in there. If you break the 975 level, you're going to have to get out of this one. Other than that, just avoid. There's no reason to buy this. Stay away from the second-tier names until you see movement. Like this is a second-tier name, and it's one that I really like, and I'm going to explain why. I was in this, and then I got stopped out of it the other day when we cut back through this line, and I bought it on this little pattern, little Morningstar pattern, and was hoping that it would push through this 21-day and get through it. So that didn't happen. But look what is going on here. This is the long-term upper trend, and we're wedged in there on this falling wedge. There's 21-day is right in here. Now that 21-day moving average on right here is 38. Get through $38, and I'm through the rising wedge, which I have not been, or falling wedge, which I have not been for months. Push up and get me where I need to be. I would be all over this. I really like this idea. And it's been basing for a while, and I think it has huge potential. I really do. NIO is one that should be on your watch list for sure. NNDM, look, people were all excited about this today. I guess because it didn't go down. I get it; it's a green day, but what did it really do? I mean, you went from 661 to closing at 713. I don't see the reason to be excited about this. I'm still below major support, so that's my major resistance, and I cannot stay above the 21-day moving average. I would not buy this until it gets above the 21-day moving average and closes above it and has a confirmation move, because it already fooled us once. That's what I'd be looking for with this one. If I was long this and I was down in it, if I break the 200-day, you need to get out of here. I'm going to hammer this point home over and over again. It can always get worse than you think, especially in market environment like this. They're just punishing people. because there's 30% less volume in the market right now, so they can punish people. NNOX, we threw this out there as a void when it opened on that news, and it just sold down. Frankly, I was shorted. I covered right here. I didn't think it would break this, and just look at what's going on with it. It's just nasty stuff. If you're long this, you really need to reevaluate what you're doing. There is no reason to be in this. None. I see no support on this whatsoever. I don't want to get into the fundamentals of the company, whether the product works, doesn't work. Something's going on, and everybody wants to get out of the stock. It has just been massive selling. I mean, you literally could have sold it and just never even looked at it and walked away and been up substantially. So I would just avoid this. If I was in it, I would be getting out of it. There's really no more levels to look at. So Nvidia is one that we had in the newsletter and we did exceptionally well with. We were up over 100 points and we talked about getting out of. Look, I don't think that this trade's over. We're above the 21-day, crossing the 50-day. We look great. It's acting great, and I think that it'll do well. So this is not something that I would get out of. I would stay with this one if you entered it. Now, for the newsletter purposes, we're out at the 629, 625 level because it broke the upper trend line down. But I will be looking to re-enter this on a higher high of the 618 level. And if I'm more adventurous, 609.70 is going to have me have interest in it. But I don't think that the semis are anywhere near done. Pins, look, this is pretty clear what happened here, right? We got right to that 86.50 level, and we just couldn't get above it. And then it broke down, and this is what we're dealing with. You can't buy this. It's like catching a falling knife. I mean, this could just, there's this, you have all the support in here. So hopefully that holds. If not, we could come in and we can retest. And you have some support here. I won't say you don't have any, but you're through that. So there's not really a support line there anymore. If you can flip above this and get over the 76 level, that'd get me above these two moving averages as well. Maybe you can consider it. But other than that, a lower low, if you're in that and you're down, you need to consider getting out of it. This is a smaller name, POWW, POW. I like this. I mean, you're not falling apart here, right? You're not overly falling apart. So I like this name, and let's see what happens with it. But I don't see the reason to rush into this. It's got to get above that 50-day moving average. It seems to really respect that. Get above that 50-day, and then you could take a look at it and possibly see if you can retest these highs, the 8 and then the 10 level. But until then, I wouldn't go near it. Close above the 50, which looks about $7 right now. Run. Look, these solars, I'm just keep waiting for them to turn. They're basing, and you can see these bases in them. I can take these levels down here at this point. See that? You can see the top of that, and how that's resistance now, and how this is support, right? I mean, we don't even need moving averages, but it's just not working. It's just basing. It's not doing anything. So for me, there are voids. Avoid until they prove differently. SE, I don't even need the moving averages. We drew these true trend lines, and we can use the moving averages. I'm not saying not to, but it's pretty clear that you're still in that kill box, and that's great. You tried to get above it here, you failed. Tried to get it below it here, you failed. Nothing's changed. Until that changes, there's nothing to do here. So if you're long, I would not be getting out until I make a lower low and close there tomorrow, depending upon your risk tolerance, but I'd be looking for that lower low. And going long, you can't go long this until you close above this wedge line. There's no reason. And there's really no reason to look at anything else. I mean, it's go time one way or another. Something's going to happen. There's really no reason to drill into that anymore. They're your key levels. SI, I was asked about this today, and I stated to stay away from it. I was short these. I closed them way early. I did not expect this to happen and for this to continue in these names. But look at this. I mean, this is just not going higher anytime soon. You might get a dead cat bounce up through here and get 10, 15, 20 points on that bounce. But you're going to have to consolidate for a period of time after coming in like that. And I can throw the indicators in and just point out, like when the 21 and the 50 are crossing like this and they're going to start rolling down, they become resistance. So getting through 140 is not something that is going to happen very easily at this point. The days of thinking that we're getting through these highs, those days are over for right now. So right now you're just trying to get up 10, 15 points on a shorter term trade. Snap looks exactly like the pins, but a little stronger. You're trapped between the 50 and the 21 day. Nothing to do. If I was long it, if I closed below the 21 day at this point, I would be out. You really can't play games with these right now. There's two kinds of traders. It's either quick or you're dead in this kind of market. It is a bull market, but you just have to be in the right names and you have to be fast. The Qs are hanging in there and the SPYs they're only percentage points off their highs. This SOXL, I actually went long it here, and I think I'm early, but I just saw a little pattern and I kind of like the move. The 50-day, once you get above that, you should be looking at it. The more conservative trigger is 38.25. I do not think semis are over. I have too many stocks to get through, but take a look at Lam Research and KLAC. They do not look like they are breaking down. And this one to me as well, look, you're above the 50-day, you're above the 21-day. This is the stock square. This is what you want to look at to get into. Okay, this is where you want to be when we turn. This is not breaking down. This is not trying to take out new lows. It's just hanging in there. Now, if it starts to break down, we have to reevaluate it. But as long as you're above that 50-day and 21-day, you could be looking at buying this on a turn. They're going to go to the larger cap names first. And that's why I'm trying to show more of the larger cap names. But I know people trade certain names and really like them. Look, we called this a week ago. TIGR. Every time you get above this, it's whack-a-mole. Whack-a-mole, boom, 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 and happen again today. Now you come to this support level and you test it, and then you bounce off of it. So if you're lucky enough to get in at $16, that's great. Now you have to get through the 18. You get through 18, you get to 20. At those levels, you just sell it and move on. And there's a lot of stocks, so I am talking a little faster today and not giving as much detail. But I just want to get through them because I know a lot of people are concerned about their positions and what they see going on. And I'm concerned that I don't see people just blowing out their positions. If it's a loss, it's a loss. You just sell it, you move on. You don't ride it from 37 to 25 because you bought it at 45. That's nonsense. They don't come back. They don't always come back. So what you're seeing here in TMDX is you're right at a support level, major support level. If this breaks, okay, you're going to 21.43. It's that simple. Okay, if this level breaks, you're going to 21.43. Just keep that in mind. I would not be buying this. I was hoping that we would see some signs to buy these, but we just haven't seen them. TQQ, we're in this at 105, 121 target. Look, I see no reason to get out of this trade. Hit support today, rallied. Let's see what tomorrow brings. But I really don't see a reason to get out of these. And let's see how it plays out. But we tried to get through 111.86. First time usually doesn't work. So let's see what happens the second time. But I'll honor the stop. But I don't see a problem with the NASDAQ. I just really don't see this major problem with the larger indexes. Are things going to bounce around? Yes. So what? I mean, if you're in the right names and you're at the right price, it just doesn't matter. So the 50-day here, you see how you're respecting that the whole way? Tried to get above here, couldn't. But you're still respecting that 50-day. It's a pretty crappy close. You would like to see it close higher. But the 21's curling up. And this is going to start curling up soon. This is not heading down unless something major happens catastrophic with earnings or the company. You have here's a low, higher low, lower high, higher high, higher high, right? Where's this going? Nowhere. TTCF, you can see what's going on right here. This is just nasty stuff. I've got a lot of lines on this chart. You're below the 200-day. Once you break the 200-day moving average, whether you're a long-term investor or a short-term investor, there is no reason to stay in that stock. Period. None. I've seen it too many times. You could say you're long-term. This thing can stay under the 200-day for years and just sit there. I've seen it. There's one stock I showcased in the newsletter today. just to point this out, where the company was making $18 billion and was trading at a $600 billion market cap 20 years ago. Okay, today it's making $48 billion and it's at a $400 billion market cap. Okay, in 20 years, it's only come back 67% from its high in 20 years. So you have to understand that. Like, these things just don't always come back. So you just have to understand that and have a process in place. Like, what's interesting about this one is just the massive selling. That does usually mean exhaustion. So you might want to watch that. But if I took out this low of this bar here with this stop, with this amount of volume, this thing's going lower. I'll say that again. So if I take out this low with this amount of volume that just showed, and I take that out, this is going much lower, because that just means there's so much more stock for sale. Twilio, another good name on the long side, it's hanging in there. We're below the 50, which isn't great. We would like to see it get above there, but this thing's 10% off its high. The larger cap names are hanging in there. So I like this. I wouldn't buy it until it gets above the 50-day, which would get me above the 375 resistance. That's where I want to be. UPST, I just want to walk through this trade real quick. And again, this was in alphabetical order, so if you don't want to hang around for the Z's, then we're done. But look at this. Hold on. Let me do it this way so that you can understand this. So this UPST, I just saw this little pattern, and it's where I bought it. So if you didn't watch yesterday's video, I saw this little pattern. It's right here. Boom. We broke right above it. Started the position. Okay. I wanted to stay in the trade, so I stayed in the trade. Even when it ran to this level, this 101 level, which was right the close of this bar, I didn't sell it because I wanted to stay in it. I was hoping to get to 105 and see if we could push today. Obviously, it didn't. Now, my trigger to get out was right when we broke over that bar. As soon as we broke over that bar, that was it. I was out. There was no reason for me to stay in this trade. So I made like $1.50 on it, but it saved me from dealing with all this. And now what's going on with this, just to point it out, we're just riding this trend line down. If you throw in the indicators, there's nothing here. There's nothing to stop this. Your next stop is $82. That's your next support. It could stop wherever it wants, but your next real support is $82. And if you break that, you're gap filling. So you need to be careful with this. This can get a lot worse. I keep trying to stress that. Zillow, you're just seeing that H pattern right here, and we're breaking, and we got to get above that 21-day moving average before I buy it. And frankly, at this point, I don't think you have to be in a panic sell with it because you're basing, but just watch it. And then finally, we were asked about ZI. There's not really a whole heck of a lot to do here. I mean, you're not respecting that 21. The 50's curling down. Get out of it. And let's just go through this last one, ZIM. I was kind of surprised I wasn't asked about this one. This was our stop 26 3/4. We haven't broken out of it, but you're back through this channel, so you're going to have to watch this level. They're just really, trying to shake people out of it. But I do think that this is still you're still in that huge flag. So this may not be over, and you might want to keep this one on your radar. I don't think this moves over. So that's it. As always, please subscribe to the channel, turn on notifications. And Saturday, we are going to be doing that live session at 1